Hi everyone, and welcome to today's Altcoin Bible. I have three really interesting cryptos to show you. One is an interesting crypto based around looking at data analytics via crypto trading. So that has really been flying over this little phase. I'm going to check that out. That is my cherry ripe. Also going to look at AAVE, a DeFi blue chip. It could really go either way, and I really hate saying that, but if we look at the charts, it has a history of following a very clear up and then down, and it continuously going lower, but this might be the time it changes that trend. We're going to have a look at that. I'm also going to have a look at Matic, always an interesting chart to look at. And then I'm going to show you a layer one in Polkadot, which looks pretty awful below our danger zone or in our danger zone for this week. And I want to show you why it might not be in the worst position in the world when we zoom out on a higher level. And that's what we really want to focus on during this bear phase, because if we just look at the daily charts, 4-hour charts and whatnot, it is so much in the short term at the whim of Bitcoin, the US dollar, what's happening in the macro, that we really need to step out and actually see where the value lies in these cryptos, how far back we need to go to find where the floors are on this. So let me crack straight into Quant. So this is my cherry ripe of the week. Now you can see here, it's had a pretty good pulse up from the bottom here. I mean, that might not be the final bottom, but just in the short term, this looks pretty nice, to be honest. And why it looks nice as well is because it's been in this significant downtrend since September 21. So very visible there. You can see that. And I've just drawn a green line just to illustrate that. We ducked above it earlier this year, ducked below it. This has been that pretty severe downtrend in Bitcoin, so follows that nicely. But this here, this is a clear break in the trend. And it was formed, if I just highlight this here, just for your own information, by a change in this trend. So there's the low here, then there's a high, then there's a higher low, so it's higher than the last. And then this is significant, breaks the trend, rips through two really important moving averages and creates a new high here, which is higher than the last. So that is a clear trend. And this here should form that new higher low. I mean, unless it just really drops through the floor here, but we're just looking at what we can. And it's run straight into this heavy horizontal resistance. So that is important too. You wouldn't expect it to rip straight through there first go, but it is consolidating into, to my eye, what looks like a little bit of a bull flag before it's going to go higher. Why this resistance is there? Well, it used to be support for this entire structure moving down. You see bang, 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 and then it breached here. So extremely heavy support now turn resistance, which Quant needs to flip. And it looks like, as we speak, it's really trying to make a run for it. So looks really significant. Also, what we want to do on breakouts and key contextual levels is look for strong volume coming in, just to confirm that move. So here, as it broke through those moving averages and the trend line, we just look down here on the volume. You can add this on TradingView, just type in volume, and bring in the volume bars. You can get a little bit more complicated with it, but I like to look just at the basic. There's a few really large volume candles. You see this little spike of a few of them here. Compared to previously, there's not many. You see on this big drop here, there's a big one that came in on that buy up. On the big crush in here, there's a big sell candle in. What we really want to look for too is really not so much the green and the red, but we want to see a concentration, a heavy concentration of the coin actually changing hands. That is high volume coming in. It means that there's a point where buyers and sellers are finding agreements in the price. You know, someone wants to sell at that price and someone wants to buy it, but the buyers getting on top of the sellers in terms of more buyers coming in is always a positive sign. And that's what's happening here. So I can see here that the RSI, really strong bull momentum coming into this little high here. Haven't seen that since we're over here and had that crush down. This looks just more positive across the board. So I like this. This looks like it has legs. The mini consolidation here under key resistance. I can definitely see a break up to this 200 moving average. So that's where it's going in the short term, I think. So 82. So that would be quite a significant move up to 108. That would be another 30% move. Don't expect that to happen overnight, but I think that is definitely on course, especially whatever's happening fundamentally under this crypto is probably driving this move, because not many cryptos right now look too good. We're all waiting for the CPI print that's going to come out and what the Fed's going to do with interest rates, which I think is going to be, it's fairly well known. So the market is trying to price that in. It's just whether the CPI numbers above, below, or comes in at expectations, which could move the market again. But Quant looks like it's breaking that trend here and looks good. So that's my cherry ripe for the week. Now, I just wanted to pull on over to Matic. So I'm going to use Matic and DOT as my two danger zones. Just want to paint slightly different pictures, because one, Matic looks okay, but it could easily break down. So that's why I'm using it as my primary danger zone. But I also want to show you DOT, which looks so much worse. So the different polarizations of the two danger zones, and I just want to show them to compare like I've done previously. So Matic here. Now I brought up Matic the other day. I think it was my one to watch. Needed to break this trend that just, you can see here, it's just hanging underneath, wicking, getting underneath these moving averages. Really needed to break that trend to move up to these levels here. And it is stuck in this very big volume support area. So in here is quite a good spot. Also see this developing of an inverse head and shoulders. So you got a bit of a left shoulder over here. This is the neckline, a head, then a right shoulder here. And then we're coming back down. Generally, inverse head and shoulders break to the upside. Statistically, they do, and the right shoulder generally breaks up that way, which we had a bit of a move there. But the overall market seems to be putting pressure on things. And again, patterns are very subjective. I could even be reading it wrong. Patterns, sometimes they work, sometimes they don't. I prefer just horizontals and looking at moving averages and whatnot. But it is there, so I'm bringing it up. What is interesting about this is we did break the trend briefly, but we've come back down underneath almost to retest the key moving averages. It was the 50. So this is the first time we've actually broken above the 50, which is the yellow line there. So just to recap here, the 50 moving average, every one of these green and red candles represents a day's worth of price action. So the yellow line there is the 50-day moving average. It represents the average price action of 50 of those candles. So that line is very telling. And the 21 is the blue line. So exactly the same, but 21 of those candles. Right now, Matic is resting on top of them, trying to find support there. This absolutely could be the platform to bust up through this area. But why it is a little bit of my danger zone, I wanted to just show you guys this, is that we're seeing a bit of a hidden bearish divergence. So these two peaks here, second peak is higher, but on price action, the second peak is lower on the top. So that is actually a hidden bearish divergence, a very minor one, but if it plays out, this could absolutely drop a little bit lower and retest these areas. Just wanted to show you that because Matic still has yet to break the trend full on. And the longer it stays not breaking this trend, the more likely it does something like we've seen over here. Comes back up, breaks a little bit above, comes back below, can't do it, and then breaks back down. The 50 is absolutely key for me. It stays above it, it's probably going to rally up here. It needs to come in with a bit of strength. And in fact, let's see volume. So yeah, there's a ton of volume coming in here at the moment. So this is a really good sign as well. So yeah, definitely a danger zone area for Matic, but it doesn't look like the worst chart in the world. I wanted to show you that. And now I'm going to move on to DOT on why this is a more significant danger zone. You can see just by your own eye how important this horizontal line here is. And I used it the other week as my danger zone, I believe, as well. And just what would happen now that we're resting under support. And you can see how traders use this. Once it gets under these key supports, a lot of traders just go short, and then it's being sold off heavily because it's lost key resistance, key support. Now it has nothing to catch it beneath it apart from volume. So there is a bit of volume coming in here, but if it loses this level, it's going down probably to this next layer down here on the, I think the weekly supports it at about $6. So just keep that in mind, that DOT just looks horrible here and it's going down. But why I said in my intro that doesn't look terrible if you zoom out. If you look at the RSI, slowly gaining strength. And if we look to the longer game here, you just see here that DOT is beginning to get into a zone where we've had a move up of, 1,000%, but on the drawdown, we've had a move of around about 90%, gets down to 91% in these areas here. This is the weekly volume floor. So it will run into these areas exactly where all this chop was on the left-hand side. This is beginning to look into some supreme value areas for mine. We're looking at, the lowest levels it's ever been on the RSI, moving into $6 or just a bit under. I think that is just super, super value. So if you look back here, I mean, just these cryptos tend to retrace once the cycles finish about 90%. A little bit further than that, but they don't tend to go any more than that. They can, of course, but into these areas, you just got to look at it in the longer term view. So weekly volume still below 6, but what's key here is just one simple indicator. It got below that key horizontal, and you can think to yourself, all right, well, this still has a little bit of room to play out. I'm not going to go too heavy here, but you can start your dollar cost average once these longer term supports are broken. All right, now AAVE, I wanted to show you this one. Like I said in my intro as well, AAVE could absolutely buck the trend here and go higher. So we can see here that AAVE made the low, that's made a high, that's made a higher low from the last, then it's made a new higher high, then another higher low, which is great. That is exactly what you want to see in a trend-based move to move higher, exactly like, though, unfortunately, what we saw in May. So the low and a high, then a higher low, then a higher high, and then it came over here, exactly what it's trying to do over here, resting on this 21 moving average. But what happened back here? Broke down, made a new lower low. So are we going to break the trend here? You see on the RSI, it did exactly the same thing back here as it did over here. But this to me just looks a little bit better. There's a little bit more strength in the buyers around here. It's gotten a bit lower. It's ground out a few more buyers. It's dipped into a bit more liquidity in these huge volume areas. You see on the right-hand side. And AAVE, if we just go out to the weekly as well, just for a bit more data, this is an enormous band of volume support on the right-hand side. So whether it goes lower, yeah, it can absolutely, but this is an area where buyers get super, super interested, and sellers have had it their own way for a very, very long time. And this goes across the board with crypto. You just have to remember, what's the trend been for a long time? You obviously follow the trend, but at some point, the trend has to change. One side weakens, the other side gains, and then we see a reversal. So just keep that in mind with AAVE. I think definitely one to watch for me. I think it could really move. And it has a bit of the fundamental narrative too, with everything that's going on with CeFi, centralized finance, we're imploding, Celsius, those sort of characters. They had a real centralized authority, but DeFi has actually been up and running this entire period, run by smart contracts, no real central party in between, doing dodgy things. That has been running 100%. And it hasn't really broken down at all. So AAVE is one of the core blue chip centerpieces of that industry, and it's getting a bit of love. So yeah, ticks a few boxes for me. But AAVE, let's see if we can back the trend. What it really needs to do, it's had a really nice little pullback there off that 50, about 20%, and now it really wants to break. If it can get above the 50, then we know she's on and she's going higher, probably towards that 200 moving average over around of a midterm time frame. So guys, I hope you've had, I hope you've enjoyed this episode, and I hope you have a great day, and we'll catch up on Friday for our Friday roundup. So again, have a wonderful day. Thanks for watching. Bye.